Tom, it's the end of the year. Every year, there's certain things we like to do and think about with our clients. What's tax loss harvesting? How can it benefit clients, and how do we do it?
Well, in its simplest form, tax loss harvesting is taking and trying to pair gains versus losses. We're not CPAs by trade, so I want to make sure that I get that disclosure out there. So we can't always give direct tax advice, but as advisors, trying to create a net zero event for the client, I think they appreciate. So in its perfect form, you take their losses with their gains. And this year, it wasn't a great year from a performance standpoint. So unfortunately, the clients could have lost some of their principal, and because the subsequent years were relatively good, they had gains. So it's kind of a lose-lose, where you have a tax bill on top of you've lost some money. So what we're trying to do is make sure that, at least from a tax standpoint, we're trying to save that money over time. So that's that's the purpose of it.
So what we're trying to do is help them ultimately pay less in taxes at the end of the year. Now, obviously, this is easier to do when markets are down, which is why we haven't spent much time talking about it in previous years. Can you talk about some of the ways we can accomplish multiple things at the same time? Like, in addition to harvesting losses and lowering a tax bill, I know there's a lot of times when I found we can accomplish multiple goals with the client portfolio simultaneously.
What may come to mind here is a couple of things, actually. Number one, we have a lot of retired clients that need to bridge the gap with their income from their investable assets. So again, in its simplest form, you're trying to give them a monthly stipend. And sometimes we do it systematically. Sometimes we raise cash for the clients. But ultimately, what we don't want to happen is selling in a down market to have the client sustain their life. That's another lose-lose. So a good way around that is what we call, in layman's terms, the bucket strategy. So when we're sitting down and we're doing retirement planning with our clients, we're looking, let's call it 6 months or 12 months out of what those expenses might be. And what that does, instead of selling and creating a much more exponential erosion of their funds by selling in a down market, we have cash set aside. And ultimately, I feel that dampens the volatility in a client's portfolio, where they know that they have that cash and it's going to be there if we move it to their bank account or whatever they're doing to spend it in their retirement. So I feel that as we're looking to tax harvest, and if we have a client that's also retired, we're also at the same time filling up that bucket to make sure that they're replenished in the future months.
So tax loss harvesting allows us to be tactical about harvesting losses where they occur for our clients to lower their tax bills potentially. At the same time, increase their available cash if they're living on their portfolios. This is not something that everyone can do. I know you and I couldn't do it at our previous firm.
Right.
So having the ability to do that now is something that I think we really enjoy and appreciate. I do. I hope my clients do too.
Ultimately, Frank, getting the clients rebalanced after we get through tax season and they get back to their agreed upon suggested allocation based on our investment planning with them, we go ahead and we're proactive as well. So in the hopes, no guarantees, in the hopes that maybe we're legging back in and getting them back into that disciplined model that we've created for them, and after this tax season's over, is also something that we do for the long haul. So to me, it's just absolute. It makes sense. It's logical. It's tactical, and it fills a lot of the benefits that the clients are looking for, all in a couple of transactions.
Well, Tom, thanks for taking a few minutes to talk about tax loss harvesting. Taxes are important, but not super fun or top of mind. It's just very important that we have a focus on it now at the end of the year. I'm sure that if anyone has any questions, they can reach out to either of us.
Yeah. Thanks for your time, Frank.
Thanks, Tom.